What is up, everybody? Happy New Year. Happy Sunday. Welcome to our weekly watch list. If you can hear me clearly, let me get a one in the chat real quick. Hopefully, everybody had a good New Year. Hopefully, you guys got to spend time with your family, nice couple of days off. I don't even know what dimension we were in yesterday. I don't know what day it was. I don't know what was going on, but I'm glad to be back. If you're watching this video for the first time and you're not part of our server, you can go ahead and visit gorushgang.net. Visit gorushgang.net, click join us, scroll down to the bottom and try us for free. Hit that fun pass, try us for free, 7 days on us. And we will make you, it'll be your job to make your first month's payment and try us for a full month. And we will make it happen for you. All right, so I have, let me see, 1 and 2. Forgive any background noise I got going on here, guys. I got J and S in the building. What up, fellas? How you guys doing?
What up? Good, man. How are you?
Good, man. Happy New Year.
Happy New Year. Happy fucking 22.
Yeah,
22 Gold Street.
22 Gold Street, baby.
22 Gold Street. I love it. All right, so yeah, I guess we can go ahead and get started. You guys want to? Which one of you guys want to grab S&P?
What's that?
S, you want it?
Yeah, I can take it. All right. So last week's super low volume, I will share here in just a second. What screen am I wanting to share right there? All right. Hopefully you can see my screen. So here's SPY on the daily. It actually looks pretty bearish here with the finish of Friday. I was watching this, and I know I wasn't around much last week with the low volume, but I was kind of watching this box for the week when it was creating it to see if we're going to continue to new highs or if we're actually going to come down and retest this 470 area. With this close outside of our box, I expect us to come down into this 470 area. To be honest, I didn't look to see what we opened up on futures, but it looks like we might have opened up even. Now that I just glanced over at my TOS.
We opened up at which we gapped up 16. Now we're up 14, 15.
Okay. All right, there you go. So that's marginal, right, as a whole. But and on the weekly, we got a little push down here, giving us a little bit of an inverted hammer. And the monthly, those still look strong. So with all the consolidation we had in this, kept on retesting the 470, I do expect this to come down and get this area again, maybe 472, maybe not all the way down to 470, but at least come down to the lower end of this engulfing candle here, gap up candle. So like 472.06 right on. Come down, retest, and then start continuing back up to the upside. Any loss under this 470 area again, and we're basically coming right back down into the 455 area. This is going to be a very interesting line to watch this week if we do decide to come down to this area. Overall view, I mean, it's a new year, right? Everybody's going to be buying up stuff. Tesla has good news, which might help propel us a little bit. But if we look at things like Facebook, a little bearish, Amazon, a lot of people are talking about Amazon, but still as a whole, if we look at Amazon on the weekly, still consolidating pretty hard. But we're in this area where we could lose 100 points pretty fast with the way that it closed on Friday. And we have a little bit of a falling wedge here as well on Amazon. It's not a falling wedge. What the hell am I talking about? Rising wedge here. So this is coming to an inflection point as well. Stays within this trend. This could be the catalyst that really pushes us to all-time highs again. So just things to look at. And obviously with all those same names, we got the Qs that are run off it. And that gave us basically a dragonfly doji. So a little indecision overall in tech names. And follow that up with Apple. Apple, nice strong monthly candle. But let's look at the weekly. Got pushed down, similar to SPY, right? Apple's been basically carrying SPY. And again, a loss of basically 177 he's going to send us a little further down. This is kind of that pivot machine gun idea. So a loss of a break below 177, and we're going to start looking to take out these pivots, 1, 2, and then all the way down into this range as well. Whether it gets down there might not happen, but that's how pivot machine guns essentially work. You lose this low here, and he takes out the rest. Kind of market always wants to find a stasis. And then Microsoft as the last one. Again, very similar look. Pivot machine gun again, a loss of this low, of this engulfing type candle, basically 35.50. And we start taking out some of the other pivots. So we're at a weird inflection point to start the year. Maybe we come back to test these and then rip off to the top side. But overall, the charts don't look horrible. All right, that's what I got. I guess I'll just jump into some of the stuff that I was looking at as well, just to keep it moving. So NVIDIA threw up an inside month. Well, most chips threw an inside month. So you got NVIDIA inside month, AMD inside month, TSM inside month, I believe. Yep. So all of them kind of are in a point of indecision. Overall, I don't necessarily like the candles that NVIDIA and AMD threw up. These kind of give you more of a bearish feel overall. AMD similar. But what I do like is LRCX. I do that every time, dyslexia. On the other hand, looks a little bit better on the monthly. Kind of got a shooting star type thing there. The weekly, just a little fight down. Still a good close though. And then as we get into daily, we got a nice inside day that created this nice box. So with everything else kind of in the sector being more in an indecision type range, you have LCRX that's presenting a good, decent risk reward, basically saying that if we break over highs at basically 729.75 or below the low of these boxes, we can run the puts on, because you can see nice support here as well in the daily. So for this week, LRCX should be your chip play if you want to play it, with AMD and NVIDIA giving decent looks, but still in the middle of ranges as a whole. Maybe Monday comes down to this 141 area AMD and finally starts heading back up, kind of dips out of it and then goes up. And NVIDIA looks very similar. So I know a lot of people like to play chips, but we're kind of in the middle of a range where we want to see a reversal candle on Monday or Tuesday to tell us to the upside, whereas LRCX basically has us set up pretty good moving forward for this week.
We got earnings coming up too on the 26th, I believe.
Yep. So you could have a nice little run up starting here, depending on if it gets out of the box or not, or even a little dip and rip, right? We come under, take out one of these pivots, and then head back up off of there. So I'd look for LRCX to be your chip play this week, with AMD waiting and NVIDIA waiting for actual reversal candle on the downside and show us a move to the upside. My second one is Snow, which threw an inside bar on the weekly, double inside bar on the weekly, kind of found its mean level here, which is this trend line. You can see came back even down here, right? This is where it kind of was started, came all the way up, found its mean, dipped below, came back, found its mean. When it finally got through again, came back, found its mean. So we want to see it hold this trend line all the way through. And if that happens, obviously we'll break the downtrend line and start moving to the upside. Now, if we break through this trend line, we'll be looking for it to find its channel, which would be essentially there. So we'll be looking for targets down in this range, which just so happen to line up with, that is the, I think that's the 100, the 50. So 50 would be your support coming down. But upside, still, we could break through this and make a trend reversal, which off an inside bar wouldn't take too much. Gets over 363 and we really start moving. If you're on the riskier side, we can see if we bounce here on this 336 line, and as we start moving up, we can play it up to the 363 line. But I like that, having an inside bar on a weekly. Daily looks pretty good inside of our triangle here. And let's see if it come down to trend and see what happens to it. Again, we fought off this 363 line really hard throughout the past couple weeks. And what did the monthly look like? And you can see how hard it fought off that 363 area and got back above. And so snow is a decent play here. And then we have square, which found a nice base here at like 158.25. Came down the week of the 13th, bounced up hard, came down again, pulled off. So now we're just going to look for it to try to get out of this consolidation box for the most part. Anything to the downside, it's going to fall hard. So we got first spot here, second spot here, with third spot being right about there. So I'm not saying that's going to come down to 118, but through 58, you get 51 and then 35 pretty fast. And as for the upside, if we can get out of this box, we shouldn't have a horrible time until basically we get through the box, and then we'll get to 177, 178, and then into 195. So again, risk reward setting up there, just a little patience. If we can continue to hold this 158, especially off this double bottom, if we can stay above and hold, say double bottom 1, 2, we could almost go even a few weeks out and start loading every time it bounces off this with our stop loss of daily close under 158. But I'm going to keep this one on high watch. And then thirdly, or fourth, I guess, not third, a lot of travel stocks threw up inside weeks. So we have AAL threw up inside week. That looks pretty good, but out of airlines, DAL looks the best to me. So for ease, a break above basically $40, and we start moving back up. We had a nice little kind of, again, double bottom here, moving up through. And when we get to the daily, looks a little bit better. You got the 9 crossing the 20 with a little consolidation right on the 9. And here we got to get above the 50 and then over 40, and we're through with price targets all in these ranges of boom. So to the upside, and then down to the downside, back to the weekly, we get our point where we want the break, which is roughly 37.80. Back to daily, and try to take out this pivot for sure, 36.85, and then down back to the base area of 35.50. And like I said, this is all travel stocks for the most part. NCLH also threw up an inside week, but I don't like it as much as DAL. This one's kind of bearish to me, a little bear flag. You got Las Vegas Sands threw up a real tight inside with that strong resistance here at 38.58. So this could be another easy play for inside bar on the weekly. Remember, weeklies kind of tend to play out a little longer. That's a beautiful kind of double bottom into resistance, recoup, and through. I guess that's little triple tappy too. We gap down through that support resistance line, try to get through again. 1, 2, 3. Here's our little pullback. 9 cross the 20 and got support of the 9, so push through. So maybe Las Vegas Sands, keep that on your watch as well. And again, MGM to round out the whole travel stocks, cup and handle here. And we're looking like we want to break out of the handle in the next day or two. But that was also inside week. I've got to get off this. Another inside week here, so break above the high and we get moving into the first target of 46.77. So those are my main watches. I don't know.
There's a lot of really nice setups in the market right now.
Yeah, the consolidation and low volume of last week and the end of Christmas week kind of helped things set up nicely for us for a move one way or the other. I don't know who wants to take next.
Go for it, Jay.
All right. What's up, guys? Happy New Year.
Jay being the responsible father and son and husband that he was. We didn't get any drunk texts from Jay on Friday.
Yeah, no, I put my phone away.
I think he was wallowing in his sorrows.
Yeah, because I would have broke it. I would have broke it. All right. I'm assuming you guys can see the screen here.
Yep, looks good. And for those that don't know, he was wallowing in his sorrows because he's a University of Michigan fan, and they got walloped.
Sure did. But all right, guys. Enough of my sorrows. But let's see here. So I had a little bit of a different look on Apple now. Now everything that S said is definitely 100% right with the machine gun pivot. But I kind of looked at it here. Let me see if I can do this. Right. Well, got a nice little cup and handle kind of look here on Apple, and this kind of goes with what we were just saying. There's a lot of nice little setups here in the market. I like this to break out simply because I've got a little bit, because I like to look at the futures. My view of the daily on S&P is basically this. It's building this nice little flag. I like one of the reasons I do like looking at futures is because we can see overnight sessions, high and lows. There's no gaps. So we just kind of see a continuous flow of the market. So to me, based off of the futures, and this is today, we could be setting up for a nice little breakout here as long as we hold this 8. So back to Apple. I see this cup and handle, anything below the 20. I feel like, this would be a big handle, but more than anything, my guess is we consolidate for a couple of days, let the 20 catch up to everything, and then we get a go. Now, obviously, with everything that S had put on his screen, we've got these levels, all of these levels to worry about. So these are not out of play, but just my particular view of how S&P is setting up, I think this sets up better as a cup and handle here. Now, I do have some downside plays, though, in case the market doesn't want to move. AFRM here has built a nice looking, I didn't put this on, hold on. A nice looking bear flag here. Here's your flagpole, here's your bear flag. Touched the 20 once, tried to touch the 20 again and failed. Now I expect a nice little breakdown here all the way down to the 90s here, which is the 200-day moving average, and conveniently comes into the top of a gap. So right here, AFRM filled this gap right here on this candle. Now has this gap to fill right here. So here's basic year levels. First level is right around 90. We break through that, we probably get to around 87. Break through that, all bets are off, and this gap is actually all the way down to here, down to 69 or so. So if you're bearish, I don't know if Jay Haas is in here, but if you're bearish, this is a really nice little bear flag that's been setting up. Next one I've got Tesla. So triple tap. There we go. Triple tap is here. Now this is a bit steep for my liking, but the setup still does work the same. It's just Why I don't like it this steep is because now you have all 1, 2, 3 built-in points of resistance. So you got a lot to work. There's a lot to work through on its way up. But Tesla does Tesla things, and this could really move. Now, I didn't like the daily close. You can see at the end of the day on Friday, it was trying to hold the 50-day, and it just dumped it in the last 15 minutes here. So that is what's keeping me a little bit weary, but we get a nice open. Elon stopped selling. As I said, that there was good news out of Tesla. I believe it was probably the China numbers, if I remember correctly. We get a gap up above the 50. This is a go. So we've got room basically to 1175, 1200 on Tesla. And yes, this is a natural. This right here will be another natural spot of resistance. So a little bit above 1113, but I don't, even though it's touched here a bunch of times, I feel like if Tesla needs this momentum, and it's got a lot of room towards the upside. So I really like Tesla for next week. Last one is one I hate talking about, but when I see the setup, it's hard not to like it. So GME built this. Here's your flagpole, and I know this isn't the most ideal since we had bigger volume on this. This is actually a bullish engulfing candle. I can't remember the name of it. I believe it's called the dark cloud cover, or the opposite of dark cloud cover, where you get a gap down and you come in to 50% or greater of the candle prior. But this is not a stock people are buying. So I have little faith in this. So I have a lot more faith in what this did here. Tried to breach the 20, couldn't even get to it. Breached the 20 here, pushed beneath, breached the 20 here, and really started to get pushed beneath. So you've got a natural moving average that's kind of going to push it down. I really like this to the downside. We've got down to 130-ish, 131-ish. Then all hell breaks loose here. So we break 130, 100 in a heartbeat. We break 150 in a heartbeat. So that's basically why I've got eyes on GME, because this can flush. Now, one of the last things that kills me about GME is all this right here. Notice this all started basically the 12th, 13th of the 12th, 13th of January of last year.
Yeah, I was gonna say this is the anniversary of the madness. Exactly.
So we might get, I couldn't imagine anything like this, but I couldn't have ever imagined this to happen in the first place. So there could be some idiots out there that are trying to work this up again. So that keeps me a little bit in check, but honestly, I don't think 2022 is the year of the meme again. I think this rest of the year of trading in this range, and basically all these other big name stocks like Apple, Tesla, Microsoft, having the year that they've had, Facebook, everything having the year that they've had, I just don't see the memes being able to have and we don't have, we really don't have another pandemic that we're staring down. So my guess is this dumps, and if it dumps, it's going to dump hard. So I've got lots of eyes on this right here. That's all I got. So Huey.
Yes, sir. I love it. Man, I hope that this is not another year of the memes, because that should pissed me off last year. All right, let me share. I'm going to share my screen. Share. All right. So I don't know. I guess you were talking about memes, and it made me want to look at IWM, because I know one of their biggest holdings is AMC. And I know that we played it when it broke, when it did this move right here. I don't know if you guys can see on the right chart where it kind of broke out of this very, very strong resistance, and then it created this falling wedge and then failed. So, you know, I'm looking at it now for the first time in a long time. It's below all of the levels that I had charted. And right now it's kind of forming kind of a bull flag with a bunch of chops to the side of it. A lot of sellers here. This looks like it's headed back down based on, you know, these upper shadows here. So I think that's, and then there was another one that we didn't look at. We looked at the Qs, we looked at SPY, now we looked at IWM. What the fuck is the other one? RIX. This is yeah, the Dow. Is this the Dow or is this tech? IXIC. This looks like tech to me. Let's see. Yeah, this is tech. Okay. Yeah, same cup of handle you guys were talking about earlier. All right, so let me just go into my list. If you guys do have any requests, I saw STV put a couple. Go ahead and throw them in the chat, so we can getting ready to take a look at them. So the first one I have up, and a lot of my list is going to be similar to last week's. A lot of these setups are giving better looks, or maybe changing direction. Who knows? But you're going to see a lot of similarities in last week's list for whoever was on a call with me last week. So the first one on my list is MU. This is last week's analysis in white. And this is this week's analysis. So it tapped the previous high, which we predicted. It just tapped it right to the penny. You know, what was the high on this? 96.75. So it came up to about 7 cents below the previous high. It formed higher lows during the week, right? So we have the 28th candle, and then the next low would be the 31st. So right now we have a small uptrend which can be taken out in a second, right? It can be taken out tomorrow if it wants to. Let's see. We had a golden cross that occurred on the 29th. So this is extremely strong, right? This golden cross right here with a 50 crosses above the 200. Let's see. The last time it did it was back here on October 30th of 2020, and it went on a massive run, right? It went from 49.75 to a high of 96, so it almost doubled in price. So I'm looking forward to what it's going to do with this golden cross here, right? Especially after like this kind of very sideways falling wedge into a previous supply zone, strong move consolidation, you know. So we'll see what it does. I will say that the RSI has cooled down a little bit. MACD and TTM are both still green. However, they're losing a little bit of strength on the bear side. So let's just continue to watch that. The dividend payout gave a red day on Friday as expected, or rather, yeah, Friday. So there's our red day, although it did have positive earnings, which led to the gap up. Again, I only see upside here. Let me go ahead and put my EMAs on it. Where the hell did my EMAs go? Hold on 1 second. Yeah, so throw my EMAs on this. Yeah, so I only see upside with a good risk level. This is my 9 EMA, this gray line right here. And so if it does take out this low, it'll meet the 9 EMA, which will hopefully act as a support. So that'll be my risk. If I go long and it takes out this support and it opens and closes underneath it, then I'm gonna get out of the trade. So that's my risk. And then the reward would be a break of the first price target would be a retest of the high. And the second one again would be exactly what I put before, is 100. And if this 9 gives out, you can play puts to the downside. You can take it to the bottom to where this 21 is, which coincides with the top of this box. So this 21 in this box would probably be the best case scenario in order to give it strength to continue to move through the year, right? So now I know a lot of us are making money on weeklies and next week or whatever. But I'm gonna get back into my groove of looking for plays that'll pay for a couple of months, right? So I'm hoping, for me, best case scenario would be this little daily head and shoulders comes to fruition, right? We reject this $96 level or $95.50 level, come back down, break the 9, come down to this 21-day moving average, down to 90s, consolidate here for a bit, and then work our way slowly back up. So I like MU for that. The next one I have is XPEV. XPEV is another one that we kind of went through last week. So I have the weekly on the left side and the daily on the right side. So last week's analysis bounced off the 200-day on Monday, currently fighting the 50-day, MACD curling, all that shit, right? As of today, it's above the 200 and the 50. It powered through the 50, which is this red line right here, and the 200, which obviously is down here. Our MACD is green, our TTM is at 0, which we're hoping it would get back to, which it did. So I'm happy about that. NEO had delivered positive report on the delivery, the monthly delivery numbers. So that might push as a catalyst for XPEV. I believe XPEV also reports monthly numbers. I believe that all these automakers report monthly numbers. So let's look out for that. Price is currently sitting above, what the hell is this? Oh, that's what that was. Price is currently sitting above the volume shelf. So we're in a good spot. The only downside play I see to this is that we're at this falling resistance, which really it just got formed a couple of weeks ago, right? Because we have point A here on the weekly and we have point B over here on the weekly. So this can get taken out immediately, or it can prove to be strong. We'll see next week, right? We'll see this coming week. But I like it to the upside. But let's not be surprised if it does fail at this line, then we can take it back to. Let me just pull this a little bit. If we fail at this line, then I can see us coming back down to this box over here. I could see it come back to test this range over here. Pretty much where it opened on Friday. Over here. So yeah, I'm liking XPEV. I mean, we got the green MACD now, RSI is pointing up and in a stable range, and the TTM looks like it's going to blow through. So I like it. I think it's a good setup. And I think that the risk, I mean, what I am going to do is I'm going to wait for it to actually break through and form like a kind of a base around this, kind of do what it did similarly over here where it formed a base. It obviously failed. It looks like a really ugly cup and handle, but I want to see it. I'm going to wait for it to break and hold above the previous day's high over here, back into this chop zone. So I'll just sit and watch, be patient, don't force anything. Let it give you a base that will act as your risk level. Don't just be quick to jump into the play. The next one I have is Tesla. So pretty much the same analysis as Jay. What I did notice is there's a potential 3-bar on the weekly. I think Jay pointed out the volume flag. And last week's high went much higher than the previous week's high, so that kind of invalidates the rules of a 3-bar. But it is what it is. We got a resting week with the low volume. Let's see, and I have last week's analysis, which you can read for yourself. This week I see the daily bull flag that it's forming, right? Daily bull flag here, and the flag is right above the 50-day. So I mean, it pretty much lines up with what Jay said. I think Elon's been rumored to finish selling. I think he's done as of last week, and so that's a positive catalyst. They have earnings in a month, so maybe we'll get a run up. Tesla's the original meme stock, and so I think Tesla's gonna have a nice year this year, especially after all this kind of sideways movement, all this consolidation here. I mean, obviously it ran up, and now it's kind of been in this falling flagish pattern, maybe a falling wedge inside of here somewhere. So I think it's going to be another good year for Tesla. I think Tesla's going to be great. I think the reason why I think that is because it seems like a lot of the analysts and the talking heads have changed their stance on Tesla. They've acknowledged it for more than just a car company finally. So I like it. TTM just went green on the daily or 2 days, and we have a confluence of the 618 fib, which is down here at 1028. Along with where the 9 and the 21 are. So I think that's like the ultimate support. So I'll be watching for that to come down, maybe test this area, base over here and then work its way back up. The negative to this is that it's trading at the top of this channel. So it can easily fall back down to hell. RSI is pointing down. It's pretty stable, but it's pointing down, but I just got to mention it. And the MACD is losing steam on the bull side. So that's what I have for Tesla. The next one that I have is Caesars. I really like this setup, and this is to go ahead and accompany S's reopening thesis. I don't think that Omicron is such a. We haven't received such crazy news with it. You know, people have scientists and the numbers have shown that although there's a bunch of like it's spreading like crazy, it's not as lethal as it was before. Maybe that's due to vaccinations or whatever the case is. These travel stocks and reopening stocks haven't suffered as much as we thought that they would, or as they initially did. You know, back in 2020. And I mean, look, this is just this candle right here, this one big ass candle with a range of a high of 92.77 and a low of 82.95. A $10 range. That's a big ass candle. This is like an exhaustive candle after a big ass move, right? Big ass downside move. And now we kind of came back down, formed kind of a double bottom, consolidated and bounced out of it. So this is kind of a failed triple tap to the downside. Now we're forming this bull flag. So, you know, we got the potential 3-bar on a weekly. This is a much cleaner 3-bar, although I would like much more volume to have come in on this one candle, but it is what it is, right? 1-bar, 2-bar, hopefully the next bar will break above this previous resistance over here. It's consolidating at a falling resistance line. So here's your falling resistance, this black line, and it's just trading right alongside it. We're forming higher lows on a daily, sitting on the 9 and the 21, and the TTM just regained the strength. So what I mean by that is, oh shoot, what am I doing? What's on right now? Okay. What I mean by that is it was a light green, which is strength, and then it kind of faded in strength on Thursday and regained it on Friday. It went back to light green and it blew up a little bit. So that's a very bullish sign. I'm sure Friday had more volume than Thursday, but I don't care enough to check right now. Let's see. And then so that's the positives, right? The negatives or the downside for this, downside case for this is that there was a death cross that occurred on the 23rd, which is this day. Right where my pointer is at. This falling resistance line is extremely strong. As you can see, it rejected 1, 2, 3, 4, 5, 6, 7 times. We're currently sitting below the 50 SMA, which is this red line, and it hasn't formed a higher high weekly yet. So we have, if we look to the chart on the left, we have this high, we have this high, we formed the higher low. Now we just got to form that higher high to show that we're now in a weekly uptrend. Otherwise, this could just be chop, right? So that's that. And then all these moving averages are going to naturally act as a resistance. So the only thing is, I'll say it is building a lot of it's charging its batteries over here, and maybe it'll give it enough steam to kind of blow through. So yeah, I like Caesar. I like the setup a lot. It can easily, and then I guess one more thing to add to this. I mean, yeah, falling resistance line is strong, so it can easily fall back down, break through these moving averages, and test the top over here, and then test this rising support, right? So I mean, there's your bear case. There's your downside.
Caesar's my favorite of the casinos to play.
Which Caesar?
Yeah, it moves the most.
Yeah, I mean, look at these big ass candles. That's a big ass candle. This is what is this? A $7.7 candle, a $10 candle. Yeah, I think it's nothing.
Yeah, for $100 stock.
And so you're getting like 10% moves on a $100 stock, which is super volatile. And also, you get these big moves, and now you've been getting these smaller moves. You know, the range on Friday's candle was almost $2, a little bit over $2. Range on Thursday's candle was two and change, right? So it's just getting smaller and smaller. So I mean, if the 9 and the 21 are strong enough to act as support, then I see one of these candles on the 21st, like something like this, to come out of this, you know, and to maybe get rejected by the 50, or maybe meet the 200, who knows. But I think this is a good setup. What do I have next? UPS. UPS, the reason why I like UPS and the reason why it came to my attention is because it's sitting on the 9 on the daily. Yeah, no doubt. STV. So they have earnings in a month. They have earnings on the 1st of February. So for the bull case, it's sitting above the yearly volume point of control. So I think I have my chart. Let me see. Here we go. There. So the volume profile adjusts based on where you are. There was a consolidation here. This is the beginning of the year, kind of went sideways for a bit, and then it bounced. So let me see. Since the bounce, the point of control is this line right here, 193. And the next biggest volume shelf is this one here at 212. So sitting above both of those. So that's nice. It's consolidating right around the resistance line. So I mean, if you look at it in a different lens, you have one tap over here, you have kind of another tap over here, and this is another tap right here, right? And it's kind of, when I say consolidating, it's doing it more on a daily, right? You see just the past 5 days has just been trading within this kind of area where this level is. It bounced off the 9 with that buying pressure down here. And for the moment, TTM and MACD are both bullish. They're losing a little bit of steam, but they're both still bullish. So you know how that can go, right? That's my upside. Also, we have this weekly higher low, all these weekly higher lows that are forming. Higher lows and higher highs, actually. The bear case for this is that resistance is extremely strong. I'm sure that there's a very strong supply zone here. I'm sure there's a bunch of sellers just waiting right here. Motumbo's waiting right here. As you can see with all the sell pressure. I for sure thought that this day it was going to take it out. I think we talked about it like on this day they had their earnings and it just gapped like crazy. And I think that was the last time I spoke about UPS. But anyway, bunch of sellers here. So if we can stay sideways for a bit, then that's fine. Now you can see with all this sell pressure, 5 days or really 4 days of strong selling pressure, maybe these sellers brought their levels down a little bit. Maybe they came down and said, you know what, let me just sell it here. Let me just sell it here before someone, before I try to hold for 220 and then I end up holding the bag for a little bit. Maybe they brought their levels down. So could be 4 days of selling, could be, who knows. Although I will say there's not a lot of volume on the weekly, but that was the whole market. So yeah, very strong resistance. The seasonality is lowest for UPS in January, which I guess makes sense because people are done shopping, Christmas shopping, and then I guess the next biggest phenomenon would be maybe it's Valentine's Day. Who knows? I don't know. But seasonality, according to the robot room, is the lowest in January. And the last thing for my bear case is that the last 2 weeks we had an upside move, but it was on low volume. So it could be a fake move, right? But I like the setup. It looks kind of like a cup and handle. Looks kind of like an inverse head and shoulders, bull flag, triple tap. It depends on how you see these things. It looks very bullish though to me. The risk would be, it's sitting right at the risk, right? It's, if you see just across, let me just draw a line so you can see a little bit more clearly. This is your risk, in my opinion. It's just this area here where all this previous resistance was, it's acting as support now. And so, if we can continue to hold along this line and we can work our way up, explode through that 220, go to 230 or something, So I like UPS for an earnings run up. It's one of my favorite setups for the week. Next one I have is FCX. We played FCX last week, 2 weeks ago, rather. Maybe it was, I don't even know when it was, but we played FCX into this flag. We caught the move on one of these 2 days. And so congrats if you took it. So right now I see a bull flag forming on a daily. It had a golden cross 3 weeks ago on this day, which was the 1st of December. So about a month ago, I had a golden cross. It held crucial fib levels. So if we look, let me just zoom this out a little bit. So I ran a fib retracement from the high here to the low here. And it held the 618 level on this week. And then it broke above the 786 and held it for a bunch of weeks in a row. And then bounced out of it finally 2 weeks ago to form this bull flag with no real catalyst. I mean, there's no, unless they had some good news, which is possible, but unless another copper company had bad news, right? It's sitting above the volume profile. which is right here at 41. So sitting right above it. It's consolidating right above it. It's consolidating above previous resistance over here on the left hand side. Consolidating above this previous resistance right here. Momentum indicators right now are bullish, but they need to hold at this level, and this needs to continue to hold in this area in order for this to sustain an upside move. They do have earnings on the 27th. On the downside, this is a very strong resistance level. As you can see, there's a bunch of chop here on my left-hand side chart, a bunch of chop in this area. So there's some selling pressure that was caused by the sellers who were sitting here. So this is a tough level to break through. The risk reward isn't the greatest, I would say. I mean, there's not that much volume here. Like if we break through this little tiny volume profile, we can go down to 39, 38, around there. There's a nice big gap to fill in volume. So the risk reward isn't the best on this. It's actually better to the downside. I think that the 9 will hold up. I think, your levels of defense would be, if you're bullish, are 41.23 and 40.89. Those are your levels of defense as a bull. If you're a bear, then those are the levels that you want to, break this level, come down to this level, break this, come down there to the next moving average, which you'll see is right at previous resistance. So I'll draw up a more detailed report on this before I throw it in the floor. Do I have any more? Roku. Last week's analysis, Roku's been basing for 2 weeks straight, just sitting, trading along this line right here, forming a broadening kind of pattern. Momentum indicators are losing steam, so maybe it'll just come back to test the bottom of this range and maybe base and work its way back up. But I just want to keep my eyes on Roku because it's been basing here for so long that the move is going to be a big move. It has a bunch of little micro gaps to fill. They have some positive catalyst with Google a couple of weeks ago, so we'll see. The next one that I have is, and then RIOT is sitting at the same, what is this, supply demand zone that it was at a couple of weeks ago. So we might be able to find an entry this week if it kind of bases around this area here. It does another one of these, this candle right here. The MACD supports a move to either direction. RSI is very, very low. It's sitting at, what is this, 36, right? So that's very low. And the TTM looks like it wants to work its way back up to 0. So there's a few things that tell me this wants to go back up. It's currently sitting underneath the 9. The 9's forcing it down, so it needs to overtake the 9 first. So that's why it's not top watch. And DOCU is doing the same exact thing that it did last week, is kind of just chilling around this resistance. It did form higher lows and now a lower low last week. So I don't know what it wants to do. It needs to make a decision. So again, that's why it's not on top watch, but this is a massive gap. This is a huge gap. And I'm not saying it's going to be one candle that fills it up, but with a good catalyst, we might get a nice move into it. So that's what I got. I got to step away for a bit, but I see that there's a few requests, ASML, NEO. If you guys have any other requests, go ahead and throw them in the chat now. One of you guys want to grab these requests? And I'll go ahead and stop sharing.
You already went through NEO, right? Or was I?
No, I didn't go through NEO. I didn't go through NEO or ASML.
God, what the fuck was I listening to then?
I mentioned NEO with
yeah,
Xpev.
and then I think I looked at the chart you were talking about, and it looked similar.
Yeah. I'll be right back.
If you want it, or you probably will.
If you can take it, Jay, take it. I'm at work.
I got it. So I'll start with NEO because I was looking at this earlier. I mean, there's not really much there. It's just, it broke out of this channel it was trading in between 31 and 47, broke beneath it, but whatever happened on the 30th happened. And that's all I can really speak on, because this is a very bearish looking, this I would have expected it to die, but the 30th did happen on huge volume. So all I see is a 3-bar play setting up on the daily. Here's your igniting candle. Here's your resting candle. on not even half the volume. And yes, that was, the 31st, but if you look at the volume based on historically, it was still high volume for Neo. So lower volume on the resting candle, and I would assume that we break above 33 tomorrow. That 3-bar plays out, and we've got run to 36 roughly. Anywhere 35, 36, yeah, or 37, excuse me. So 35 to 37 range, assuming this 3-bar plays out. Now, if it doesn't, we could just form some sort of flag here. Probably something similar to this. So in any case, though, if it forms this flag, that's still a bullish case. 3-bar play, that means this is in play tomorrow. So it filled this gap. Just noticed it filled this gap here. No other gaps on the way. So basically 3-bar play, anything above these two candles, anything above 33, that's a play to 36. If we play within this flag, still a play to 36. Anything beneath the 20, though, we're back down the 20-day MA, which is this turquoise bluish line. We're probably back down to 27. So that is basically your case for Neo. ASML, it's just trading in range. Holding this big volume shelf right here. Once it broke over, now it's holding, but we have moving averages, 50-day and 100-day are right on top of each other. Broke above it on the 27th, came right back underneath it a day later. And has been consolidating in between the 50 and 100 and the 8-day. So my thought here is anything above this candle, the high as this is 808.29. So 808.50 ignites it back up to 820-ish. Below here, we're below 796, below yesterday's candle, or Friday's candle, excuse me. We're looking at around 790 plus the 20-day. So anywhere from this 790 volume shelf down to the 20-day to 782. We dump that 760, 740 is easy. There's another volume shelf here at 750. Then the 200-day, and then really nothing. This is all just chop, which basically all this chop built this volume shelf here down to 677. So that's for this week. That's your play in ASML. Above 810, we'll just call it. Beneath 793, get down to 782, 790 to 782-ish. Pretty simple in terms of the daily. Pump out to the weekly. Yeah, weekly makes the bull case a little better. You're just playing this wedge here that it's creating. Couldn't do the 20, couldn't break over the 20 week, still holding the 8 week, 50 weeks down here. So, if you're looking at the farther time frames, this is probably one that, and you're bullish on the stock, this is one that you're probably going to want to take a lot of time on, maybe a month or two out. Starts to break out, 900 is its real next target. Look at the monthly. Yeah, monthly is just building this exact same thing. So if chips move and ASML moves and you're bullish on it, this monthly and this weekly is really what you want to look at. The daily gives it a lot of different looks in terms of day-to-day trading and even, I guess, week-to-week trading. This is really a better setup on the weekly, and it's a wonderful setup on the monthly. So this is one that if you like it, you could probably day trade the shit out of this because it's such a high price stock and it's got great range. But this is one I would put in a longer term port if you're bullish on it because of these two setups right here. We have a Jan 21 HRB toast. Yeah, so SUV, yeah, I mean, it's not saying that you couldn't get that move, but I think the safer play is to look at these weekly and monthlies. The daily is just choppy. I mean, it's just playing this, basically this weekly range that we saw. So this is pretty choppy here. I would go longer term on this, but this is one that can move. I mean, look, we had, this was 923 and we were trading at around 900, 924, we're trading at 850, 833, we're trading at, 800. So it's got range to move. So playing it intraday, you could probably, my setups here that I was talking about, anything will pay you if these play out. But this just looks, it's got a cleaner look for a bull case on the weekly and the monthly. Now you could stick another candle in here and that will give you another month's worth before we get a breakout. So, we could be looking at February before we get the real next move, in theory. Toast, bringing us back. So, let's get out of the monthly. I mean, this is pretty typical for HRB. Consolidating out of January, move up until, roughly tax time. Consolidate January, and then a huge move out, but a huge move down. So, it's got this pattern, and anybody that was with us in Rika's room around this time last year knows how this was, all the due diligence that was played out on this. So consolidate in January, move. This one actually then again consolidated for a couple months and then move. So consolidate January, move. I could just keep going back, and this is just how it plays out. Now, which way will it play this year is the question. So going based off of just these lines here. Actually, let's clear this up.
They're probably gonna make money this year. Thinking about unemployment numbers, how they've the unemployment numbers have gone down pretty much all year.
Yeah, so people are actually having to file taxes.
Yeah.
This is your range, so my guess is we squeeze the rest of January like it has, and then we pick. Problem with this now is we've got a 20-day that's moving down, a 50-day that's moving down, a 200-day that is starting to curl, a 100-day that's been curling a little bit, so we've got moving averages that want to push this down. Doesn't mean they will, but we've, something to keep an eye on. So, just based off of past performance, it's going to make a move for the first week, and then it's going to make a move, and then another move, make a move for the, for the first week or so, and then makes a move. So, yeah, I mean, what Huey said, lots of people back to work means it's more complex taxing. Lots of people, and you guys all included, started trading this year. It's a little more complicated tax setup for you. So it might not be something that you want to do on your own, so there could be a lot more people, trading, a lot more people with side gigs, a lot more people quitting their jobs and starting their own businesses this past year, past couple of years. So we could get a bearish or a bullish case based off of that. So this one's kind of, I wouldn't do what was playing last year and try to play something out, this is one I'd be very reactive on. So you could probably take a short tomorrow and see 22 in the next week. If you're bullish and you'd like it to move and you're looking for a bull case, I don't like anything until we break through the 50 and the 200. Anything above 24 and a quarter, that's when we could get a move up.
Take a look at XLF real quick.
Base.
I think that I'm not sure if it was just the last year phenomenon or this is an annual thing, but I think I read something about buybacks again in Q1 for XLF for the banks. So so I'm looking for another BAC. I'm looking for another JPM, but I like exactly that what you drew there. Kind of it's sitting at that resistance line, that falling resistance line, and it's holding right where the line is for the past few days. And I'm looking at it on my chart, and it's sitting right above. Pretty much all the moving averages are all on top of each other.
Yep. So I just dropped SPX on top of it, which is this purple line. So you can see XLF just follows SPX. So, and if you think about it, it makes sense, right? So you've got Goldman, Bank of America, Citibank. I think MasterCard and Visa are, even though they're technology companies, they're still considered fintech and thrown into the financials. All of those are big players in the SPX. So, move up. We get buybacks, and we've got a good chance a Q1 buyback. Then look at what we did, just bounce off the 50 and exploded. If what he recalls is correct, we could just basically do the same thing right here. Once the banks decide to start buying back their stock, we get a nice little run here. If they don't, we have this technical pattern, or we have this trend line to break out of. Anything above the 50, so anything above 39.50, this will probably go to 41 in a hurry.
Yeah, and if what you mentioned about ES, where it's kind of like looking like it's ready to break out, and if it does actually break out, then as you said, it's probably going to just bring this up with it.
Yep, exactly. So rising tide lifts all ships, and as you can see, all SPX does, or all XLF does, is mirrors the SPX. Got anything else here?
I think that's it, guys. I have dinner waiting for me. So.
There you go, my man. Starting 21 right, or 22 right.
So yeah, if you thank you guys for joining us. Again, Happy New Year, Happy Sunday. If you are not a member of the community, you can try us at the time of this recording, you can try us for free for 1 week if you visit goldrushgang.net. Go ahead and share. Visit goldrushgang.net and click join us. And at the bottom of the page, you'll see our fund pass. So at the time of this recording, you'll be able to access this for 1 week free. I'll go ahead and take advantage. If you're new, tap in. I think I have a strong schedule shift this year, so I think that there's going to be a lot more in terms of education from me this year. So I'm looking forward to that. So if you're new and you're listening to this, tap in with me or any of the guys. You can reach out to us. I think I have like an email thing on it. I don't know. Our designer has been MIA. Let's see. Yeah, down here on the main page, goldrushgang.net, just go to contact us, put your information if you have any questions or anything. Feel free to reach out. And yeah, we'll post our setups in the Watchlist channel, and we're looking forward to seeing and trading with you guys tomorrow. Thank you for joining. Have a good night.
See you guys. Happy New Year.